Hello guys, this is Joseph Asangene from ForexKits Academy. Okay, ForexKits Academy is a one-stop trading solution for you. So if you are interested in learning how to trade the foreign exchange markets, we are the right people for you to come to. So you come, we mentor you, we teach you how to trade. We even provide signals for you while you're learning how to trade, so you make money while you're learning as well. So you won't go wrong, coming to us. So if you are interested in that, what you do is send us a message to the description in the YouTube video below. So just go to the description, you see a link to WhatsApp. So once you come on there, just declare your interest and we'll add you to our free group. And we want to see you active, we want to see you working, we want to see you show that desperation and that dedication that you want it. Okay, then we can take you to the advanced groups here. But just to get started, just come on the free group and you learn a whole lot, trust me. Okay, but what we are doing today is I'm super excited. We want to do the explanations for the lessons we've had from day 1 and day 2. We had a couple of people ask us, to explain these things for them. So we are making this video to help you guys. So first of all, what is Forex? Forex, Forex, is short form for foreign exchange. Sorry about that. Forex, short form for foreign exchange. So it's the foreign exchange of two currencies. So the currencies are usually paid together. So you could have USD, that's the US dollar, JPY, GBP, that's the Great British Pound, CSF, that's the Swiss francs. You can have all of these paired together. So what happens in Forex is you have two currencies paired together, like USD, JPY. Okay, and now to trade or to take a trade on any of these currency pairs, what you need to do is have your buyer set for the trade. The reason why you believe one currency will win over the other one, or you will have strength over the other one, and you execute the trade and you just make money. That's how easy it is. Okay, and as we forex traders, what we do is we just analyze the trades. You can analyze your trades in the morning, whatsoever time that works for you. Once you do that, you analyze your trades and make money. It's as simple as that. The only requirement for you is just have the right knowledge, and be disciplined enough. And trust me, there is money to be made in the foreign exchange market. So what's traded on the foreign exchange market? Currencies, yeah. I've already mentioned majority of the currencies. You have USD, Euro, JPY, and that's Japanese yen, Swiss francs. You have the GBP, you have Canadian dollar, you have the Mexican peso. But what happens is we divide them into like 3 different categories. So we have the major currency pairs, we have the minor currency pairs, and then we have what do they call them? Exotic pairs. Okay, so exotic pairs, people don't really trade them. These exotic pairs are really affected by fundamental factors. They rarely move, but when they move in one direction for a pretty long time. And I don't trade exotic pairs that much. I don't like them. I don't like the way they move. It doesn't make me as much money. Probably just because I don't like them. I've not decided to look into them. But then you have major pairs like the USD, the GBP, the JPY, the CHF I mentioned above. Then you have minor pairs. Every other pair can just fall under the minor pairs, yeah. But in the group, I'm sure we put a list of the major, minor, and exotic pairs. So just look that up, okay? So who trades in the foreign exchange market? We have banks, we have investors, we have retail traders like myself and yourself. We have government organizations. We have central banks, okay? These people participate in foreign exchange activities every single day. US is being traded against Nigerian naira, and so on and so forth every single day, And I just want to clear some misconceptions about forex trading. Okay, forex trading is not a get-rich-quick scheme. It can make you a whole lot of money. It can change your life, but don't come at it with that mindset. Reason is you lose at the end of the day. Okay, we don't have any of those issues with our students because we give you those information from the beginning. We just make sure you don't go over risking your account. But what happens is once you have the right knowledge, you don't even have to start over leveraging your account. We're going into what leveraging is, but start risking too much of the money you've deposited into your account. Once you have the right knowledge, you just have to keep on going at that market with the right attitude every day, and you change your own life. You don't have to go about it the way everybody else is going about it. So that's what ForexKits Academy is. We are coming from a different angle. We are coming at the market from an angle of deep knowledge. We use our wisdom, put our mindset to it, and we make money from the market. Okay, so all our students are banking. I'm sure if you're not a student, you send us a message immediately as well. But let me just go back to what it is. Okay, so how do we trade foreign exchange We do it through the use of brokers. We don't go to the bank to exchange money every single day. That would be a whole stressful process. So imagine you have to change like 5 currencies. You have to walk to the bank and come back and walk to the bank, or sleep at the bank, But yeah, what we do is we do it through the use of a broker. So the broker serves as an intermediary between us, and the executions. So we place our trades on a broker, and they help us place the trade. They take the money you have on your account, put it together with your leverage and ensure that your margin is enough. I'm going to explain those concepts in a jiffy. Margin and leverage, in case you are confused here, but they just make sure everything is set. You have everything right to take that particular trade, and they execute the trade for you. And all you have to do is just sit at your home with your phone or laptop and just start counting how much money you have. Yeah, so that's what broker does. That's what brokers do for us. Okay, and we have different sessions when we trade. We included that in the class. So we have different trading sessions. We have the London trading session. We have the New York trading session. We have Frankfurt, Sydney, and Tokyo. I don't want to go into the timing and everything, but what a trading session is when the market, the foreign exchange market, is open in a particular time zone or a certain region. Okay, so like the New York, like the name is New York. You have people in the US waking up, taking their own trades. What happens is when why this information is important to you is when you have two, almost different sessions coming together, two almost sessions at the same time, there is bound to be much volatility, because there's a whole lot of traders executing trades at that particular time. And if you have at least 50% of people saying that, okay, yeah, this trade is going up, I'm just giving you an instance. You have the investors coming in and saying this trade is going up. There is bound to be a movement upwards. That's just what it is. When you have volume to a particular side, that's what happens. So once you analyze your trade properly, enter at the right time, when you have like two or more sessions overlapping, you are there to make money. But that's different when you have only one session open, and you have maybe like the Tokyo session, which I don't trade personally. I do it sometimes, but I do it when every other thing lines up for me. So once you have one session open, there is not a lot of volume. A lot of people are not trading, Sometimes, like the Tokyo session, now you have so many countries asleep. People are not executing trades, so there is less volume. So I don't like to trade during those times. I do though, but I don't like to do it. I hope you understand. So that was everything we learned for the first day, but we'll go into the second day right now. And for the second day, I think the first thing was understanding Forex pair quotes, that's currency quotes. I already told you guys we pair currencies together. So I just write GBP. Why is this keyboard messing me up? GBP, JPY, that's Great British Pound and Japanese Yen. So I just split them up right now. So two of them are paired together, and I'll just ignore the gap. The first one here, which is GBP, is called a base quote. You understand? So the decisions for a trade are based on the base currency, based on the base currency. So if you have a feeling that the base currency is going to strengthen in this session, if you feel that it has the strength, because once currencies are quoted on the MT4 chart, let me hop over to the MT4 immediately. I think that will help me explain everything better. This is your MT4. So you have Euro USD right here. Euro USD, GBP USD, USD JPY, USD CAD, USD CHF, and all of that. But yeah, so these are quoted together. Okay, you have the base currency and you have the core currency. This is the difference between both of them. So let me use this tool. So I'm dragging this tool upwards. I believe you are seeing that white stuff. Let me highlight it here for you. This white stuff right here. So if I move it, you see that it's moving upwards. So I want to show you something with it. Okay, so wherever that white stuff, the white stuff is where price currently is in. So right now price is here because this is where we have the last candlestick. So if you are taking an execution, you are taking it from there. But what that means when you pair euro with USD, that's Euro USD, once you pair it together, what that means for you is that to have 1 euro, that's one piece of euro, you need 1.17043 USD. Okay, that's just the simple difference between base and core currencies. This is it. So to buy 1 euro right now, you need 1.17043 USD. And like I said earlier, you make your decisions based on the core currency. So if I feel like this chart is going to, euro is going to strengthen against the USD, I'll place a buy trade. You know how to do that already. So this is it. I'll place a buy trade right here So I just execute a buy trade. And if that works for me, I don't know what happened. I think it's a network problem. But if I'm right at the end of the day, I'm going to make profit from that. And if I feel like USD is going to strengthen over the euro, don't forget that this is the currency we have paired together, euro and USD. So if I feel like USD is going to strengthen over the euro, I place a sell trade, and it's as simple as that. That's just the concept of the base and core currency. And that is that. Then we have forex trading terminology. So I say you need this part. I included this part because majority of times as traders we get to communicate with other traders, or we get to ask questions in forums, or we get to whatever it is, or you want to read about foreign exchange and you get to see terminologies that are hard for you to understand. Once you have an understanding of what these things mean and how they work, it will really help to grasp information faster. So if we say we are going long on a trade, that means we are buying that particular currency pair. Okay, so if I said I'm going long on Euro USD, that means I placed the buy trade on Euro USD right here. If I say I'm shorting Euro USD, that means I'm selling Euro USD. I hope that's self-explanatory. Okay, then same thing, if they say the market is bullish, that means the market is going up. Let me use where is the arrow? Main chart. Oh, okay, I'll just keep that part. Okay, yeah, so this is bullish. Let me use this instead. So if they say market is bullish, that means the market is going up. There is a movement of the market upwards. So I'll look for one that is bearish, because that's the opposite of being bullish. They say market is bearish, that means it's going downwards. So if they say market is bearish, this is an example. Just look at this part that I've highlighted. So we had the market coming downwards. That means we have a bearish market. Okay, that's that. We have ranging market. That means the market is not doing anything. This almost seems like a ranging market, but there is movement downwards. But basically that's just what it is. If you have market moving between a certain range, so it's just going up, bouncing up and down, bouncing up and down, you just have your candlesticks fluctuating in that particular channel or whatever it is. That means that's a ranging market. It's not giving us an indication that it's going upwards. It's not giving us an indication that it's coming downwards. So some people call it kangaroo market because it's just bouncing up and down. So I hope that explains it. But yeah, we'll go into PEEP explanation in the next video. So I'm just going over the different kinds of analysis we have, because we taught that yesterday also. So we have fundamental analysis, we have technical analysis, and we have sentimental analysis. So the most common one being technical analysis. Technical analysis is the most used kind of market analysis, in foreign exchange. What that is you use what price has done previously, in the previous years, in the previous weeks, in the previous months, to determine what price will do again. It's a skill that most traders have learned to master. So what you do is you use, if you are someone that uses indicators, you use your indicators. If you use price action, to check what price had previously done, you use that as well to determine what price is going to do, and you take your executions based on that bias. So if you feel the market is going upwards because it's giving you all the indication that it's going to go upwards, you place a buy trade. If you feel it's going downwards because everything that you've seen from the past, maybe from the past 2 weeks, from the past 4 hours, from the past 8 hours, depending on the type of trader you are, if you are a scalper or a day trader or a swing trader, that's what will determine the time frame you use to make your analysis in technical analysis. But it's pretty simple when you get to understand how it works. It's a pretty rich tool in your arsenal, but that's just what it is. But for fundamental analysis makes use of news releases majorly. Okay, so we depend on information from banks. We depend on news releases on unemployment, like the NFP, being one of the biggest news in forex trading. We just rely on most of those news to take executions on a trade. Okay, so it gets real deep, when you want to go really deep, but you want to understand how banks work, how central banks work, how they get to affect currencies, how inflation gets to affect currency pairs and all of that. But you don't even need to go that deep into it, And we have tools that give us, websites that give us information like that. We have Forex Factory, we have FX Street, we have what do they call it? There's a whole lot of them out there. Then we have websites like Reuters, we have BBC and CNN giving us news, financial news every single day. But yeah, fundamental analysis, it goes deeper than the news, but the news just helps you summarize everything. So for fundamental analysis, you can have the country's economy, the increase in unemployment rate and how it affects the economy, monetary policies and all of that. Okay, that's just what it is for fundamental analysis. But for what fundamental analysts do is they make their decisions based on the data they've received. So if the data you received is bad for that particular country, then you expect. So fundamental analysts make their decisions based on the current situation of the particular currency, the economic situation of that particular country. So if they have a feeling like, okay, yeah, this currency is not doing well, probably due to the unemployment rate or probably a data release from their central banks, and they feel that this currency pair is not doing well, they can now decide, okay, which currency is it paid against? The currency it is paid against. So does that particular currency have strength over it? Do I feel this is going to be a buy trade or a sell trade? And they make their executions of that, okay? But that is fundamental. I really advise you, to focus on technical analysis and fundamental analysis. I'm not trying to say that sentimental analysis is not good, I use it, almost every trader uses it. It's a very good tool in your arsenal if you know how to use it. But what sentimental analysis is for you to use the information from other traders, to back the information you have, or at least to have an understanding of where the market is headed. Okay, it could be good for you, to know the exact direction where you execute your trading, or to go contrary to what every trader believes. Once you get better at trading, you get to understand that sometimes you don't have to go with the crowd. Sometimes you have to go against the crowd. It's pretty easy knowledge, but you just have to work at it. And you can get that either through learning or you can get that through experience. But either way, if you come on ForexKits Academy, we teach you all of that. You get to understand when to go with the crowd and when not to go with the crowd, okay? But yeah, it's good to have three of these, make your technical analysis, have your fundamental analysis, back your technical analysis, and of course, just check the sentiments, check the rumor, check the buzz around traders, what they feel is going to happen in the market, and you can make your trading decisions based off of that. You understand? If you have these three things, I promise you're going to make a whole lot of money as a Forex trader. But that is that for this particular video. Make sure you share this video, make sure you like, and make sure you subscribe to our YouTube channel. We are going to put out a whole lot of content like this, okay? We're going to make sure that we turn you guys to beast traders pretty soon, okay? So send us a message if you want to learn how to trade, if you want to learn more about this, but whatever it is. Thank you guys. What's the name of it?